Nikkei is trading with gains of almost 0.1%, while Australian index ASX 200 is holding on to gains of almost 0.5% in trade.
22,786 is that number on the lower side, which should not be broken.
Bajaj Finance has beaten uphold both with respect to NII as well as the PAT.
Overall, EBITDA was down 15%. Margin has come in at 11.5%.
Indices, it's absolutely flat, blinking like a traffic signal. 23,180. It's red and green, but no change to show on it.
I believe that this is still a correction within the larger bull market because I think we saw a massive run-up for about 18 months.
Taken a price increase, a minor price increase. We had to pass on some inflationary pressure to the market.
Nifty today, on an intraday basis, it scaled past 23,300.
Firstly, what are SEBI-regulated entities? Stock exchanges, clearing corporations, depositories, mutual funds, asset management companies, as well as their agents. They are regulated entities.
Slightly off the highs of the day, a slew of earnings reactions coming in.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
I think we are back to where we started this morning. We started with nothing on the index, and there is nothing on the index now as well. Just 2 points, 23,160. So everything said and done, all told, I mean, the market, I began by saying market opening as a traffic light, right? It's back to being a traffic light.
I do.
Nothing at all. Guys, hi, afternoon.
I think there's some private joke between the boys this afternoon. I'm being left out.
No, I like the way Prashant put it. Nothing was nothing.
There's nothing going on maybe at the index level, but my God, it's exhausting to go over the number of results because the action is entirely individual stock specific. So many stocks are flying around. Hitachi, Strides Pharma, on the upside, there's KPIT, Solar Industries. We'll go on and I will talk a lot more about these stocks, but it's more on the stock level.
Make sure you don't get too exhausted, Surbhi. This evening at 4:30, you have a live on YouTube, and the viewers would like to know what you have to say with regard to the budget. So that's going to be important. And then you have the big budget. Normally, you get excited about truncated weekends. Weeks.
Excited about elongated weeks.
6 days. So brace yourself. Plenty of action in store. Have a cup of coffee and let's go for it. Prashant, you want to take us through the market action?
By the way, Nigel, it's not just on YouTube, it's on TV also. So 4:30 to 5:30, all of us are going to be doing some baatcheet on expectations and really what the market is making of it. But, for now, and more numbers as we speak, right? Max Healthcare numbers are at the bottom of the screen, is widely tracked, well owned. EBITDA looks like strong numbers. EBITDA, operating profits are up 30%, 32% to be precise on Max Healthcare. Stock is seeing a bit of a reaction as we speak. Margins 27.3 compared to 27.9. We, by the way, speaking with the management tomorrow morning as far as Max Healthcare is concerned. But just a couple of points on the market here and now, really, before we go any further. So off highs, Nifty barely in the green, now a little bit in the red, but flat basically. The high point, we did almost hit the 20-day moving average, which is, so the high is about 23, I think 330 or so. The 20 days about 23,350. So we almost got there and then reversed. And now we're down in the negative. Bank Nifty is faring a little better. At least the last I checked as it was coming in. That still had about 0.25%, 0.18. It's still trading above the 20-day, which is 49,191 or so for the Nifty Bank. And mid-cap and small-cap indices are also off the highs of the day. So lots of stock-specific reaction, I think. That'll dominate the conversation here over the next 60 minutes. Surbhi.
Absolutely. While, yes, it is a very stock-specific market, there's no taking away from the fact that it's disappointing that the market hasn't been able to hold at highs. Look at what's happening to the global backdrop. European markets are up anywhere between 0.5% to 1% right now. They've had a good session so far. US futures are also decidedly higher, not like flip-flopping. They're, properly higher. The NASDAQ futures, for instance, are pointing towards a 1% up move. So global equities are fine, but I think we've been dancing to our own tunes, earnings, and of course, the big, budget announcements that will come. Just some stocks I want to sort of highlight, and we'll talk about them as we go forward. Hitachi, we've been making the point since morning. You heard the management. Stocks not budged one bit from that 20% upper circuit mark. Strides Pharma numbers came out a while back, 10-11% higher there as well. Then you have, names like Electra, which have been well received. Dr. Lal came out with numbers 3% on the higher side. So these are some of the key movers and shakers. On the way down, the reaction to Voltas has been very severe. Absolutely two different sort of themes. Voltas on one side, and if you're looking at Blue Star's numbers, of course, were relatively better off. But Blue Star also is down 1.5%. Vedant Fashion's numbers came out, and the market doesn't like them, 6% down. So it's a long list, largely earnings driven, and we'll talk more about these stocks as we go forward.
What about ABB? The global outlook.
6% down.
6% down, but Vamakshu is making a very, very important point that there is a very low correlation between what the global parent announces and what the Indian listed company announces. So you need to take note of that, and at some point of time we'll pull up that chart for you as well, because it's happened at least in the last few quarters. This says there's not a very, very strong correlation, because for the global ABB they have unlisted companies as well in India, so that as well gets included into that. So just keep that in mind. For the time being, the street is nervous. The stock is down at the low point of the day, 6.5% lower. After that news piece came out, well, we did see that the stock moves to the low point of the day. Well, let's get in Mitesh Thakkar to help us out with the trade right now. Hi, Mitesh. Good afternoon and good to see you win. Well, we're almost done with the first series of this calendar year, 2025. And we're going to end mostly with a cut of around 2.5% or thereabouts. What's your view?
Good afternoon. So, Nigel, I think, I've been positive for the last 2-3 days. Today, I think we've seen first sign of some supply coming at higher levels. And, getting a reversal typically isn't very easy. So my sense is that with today failing to get past and sustain about 23,350 on the Nifty, we kind of got a high of 23,311. I think we are back to some kind of a range of 23,350 to about 23,000. There's no sign of downside. So, the upside has failed. So I'm assuming that we'll just consolidate for next few days. I guess Saturday could be an event day, which could give us some kind of directional bias. Till then, paid with stock-specific bias, I have a buy on HUL with a stop at about 23.75 for targets of 24.60. And HDFC Life after a correction is coming back. So buy here. Keep a stop at about 6.24. Look for targets of 6.55.
Okay. All right. Got it. Thanks very much for the trades at this hour. Mitesh, we'll come back to you in just a bit. But let's start addressing a lot of these stocks that are bouncing around today. Pharma stocks in particular are in focus, and this after the US approved a waiver which will allow people to continue accessing HIV treatment funded by the country across several countries. We've got Vinny joining in with more details. Vinny, what could this potentially mean for some of the Indian drug makers?
Absolutely. So, this is sentimentally surely positive that comes in for them, an important one, because over the weekend on Sunday, what announcement came in was that first the US Department said, and what President Donald Trump also had done is that they'd announced an immediate 90-day fund freezing pause for all foreign assistance, and this was to the WHO. So this was the PEPFAR funding, which is very important. Now, obviously, this is something that caused a concern, and we saw the stocks falling in trade on Monday and Tuesday. Now, overnight, what we saw as an announcement that came in is that the UN agencies said that now US has said that they're going to give a waiver for this 90-day freeze, which they said for HIV treatment funding. So the PEPFAR funding, which is mainly used for HIV treatment, that they've given a waiver for that. So that funding will still continue. There is not going to be any freeze on that front. So this is a decision that is keeping the funding alive for HIV treatment. This waiver will allow people in several countries to continue accessing these HIV treatment funds. And obviously this comes in as a bit of a positive for Laurus Labs when you look at it, because the company had spoken to us and they had said that yes, it's a small part of the business, not too much of a dependency, but still, almost 3 to 4% of their EBITDA comes in on this front from this side. So it's positive for that front. Aurobindo Pharma, also a small portion of the business comes in from this PEPFAR funding side. So yes, sentimentally positive for all these companies, and that is why we're seeing a buzz for all these stocks in trade today.
Okay, Vinny, got it. So that explains a little bit of excitement around some of these pharma stocks. Thank you for joining in. We've got Deven Choksi with us this afternoon to make sense of a lot of these news events, numbers, and of course, cues that we're getting. Deven, great to have you on. Let's actually start with pharma. I don't know if you had a chance to go through this, latest development on HIV treatment or not. Of course, we've got lots of numbers as well in the last couple of days. Cipla reported. Cipla's US business actually did really well. You've got, of course, Strides this afternoon. Strides is finally in a profit compared to a loss last quarter, same quarter last year. What do you like? And specifically, do you have any preference for some of the US focused companies?
Yes, very good afternoon. Well, I think in particular, the standout numbers came from Laurus, and particularly I think the Laurus's margin improvement, along with the higher amount of business contribution coming from CDMO segment, is definitely impressive if one wants to look into that part. Maybe I think whatever the previous investment that they did in building the capabilities for delivery, which was up till now struggling to materialize largely because of the customers not taking the material. The offtake was relatively smaller, which probably has started working well for the company now. And that's where we believe that the Laurus holds, I think, significantly large amount of potential for an upside, particularly in the CDMO contribution which is coming in. Similar to, in a way, I think I would say that I think has surprised the numbers as well as expectation. And probably, I think the one conclusion which comes out clearly that the complex generics is definitely working better for them on the margin front. And that also, the trend is likely to continue. So we have selectively seen some of the pharma companies and believe that the stable margin is going to be ruling the performance in coming years from now as we see it.
Okay, all right, Deven, thanks a lot for that. Well, Deven, I wanted to ask you about a couple of other names then. We had Tata Motors, that stock got a hard knock today. And from a 52-week high that we saw in July 2024, it's at a 52-week low today. Your view on the stock?
Yeah, Nigel, good afternoon. Well, I believe that I think the restructuring part of the activity is by and large complete for commercial vehicle in particular. Having said that, in 25, we are likely to see the commercial vehicle business getting separated from the parent company. And that is a good sign that I think most of the restructuring related part is complete. Of course, I think they have seen the fall in the business in this particular quarter, which I believe that I think may not be seen as a very permanent kind of a fall, particularly because in this financial year, the government spending on the infrastructure has relatively started late. And as a result of which, I think most of the companies are likely to show the performance in subsequent quarters. If the third quarter is not completely in tune with that, I think maybe in the fourth quarter, we are likely to see the stability in the margin and the bounce back in the commercial vehicle business. Good part is JLR is, I think, turning around in a good way with the higher number of profit margin that we are talking about. So in my viewpoint, yes, I think it was a disappointing quarter for Tata Motors. But the fact remains that I think majority of the pain is behind it, as I see it, largely because of the fact that the potential remains on the higher side for all the verticals that are operating.
Okay, all right. Devin, stay with us. Just coming back to you. This is something which market regulator SEBI has put out. It's not exactly connected, of course, with what the market is doing, but it is also because finfluencers have been such a big sort of part of this market expansion over the last many years. SEBI, of course, came out with rules and regulations last year, and they put out a set of FAQs, frequently asked questions, and have answered them. And I think this is important to take note of. Yash is here with some details. Yash.
Well, Prashant, the intention from SEBI after issuing the guidelines on finfluencers last year and with the current regulations is very simple. They want to put these regulations in black and white and have no grey areas in between. They want to leave no ambiguity in terms of what influencers cannot do. And hence the latest set of clarifications which have come from SEBI. Firstly, let's just understand what are the regulated entities that SEBI is talking about and asking them not to have any sort of relation with unregulated entities, specifically financial influencers or finfluencers. These regulated entities include stock exchanges, clearing corporations, depositories, mutual funds and asset management companies and their employees and agents. Now, what has SEBI asked is two things. These unregistered finfluencers or unregistered entities will not provide provide any financial advice or recommendation in terms of stocks, in terms of financial products, in terms of mutual fund products, investment advice, directly or indirectly. Second thing is that they cannot claim the returns of past performance through any of the content which they put out. These are the two things which SEBI thinks listed entities or regulated entities should follow when it comes to not having association with these unregistered entities of influencers. Very importantly, investor education as per the previous regulations was also out of these regulations, and it still remains to be the same, but SEBI's filtered the term investor education. What SEBI said is that investor education and these investor educators will be allowed to use prices, charts of companies in terms of their illustrations, but these prices cannot be for the previous 3 months. It will have to be much before those 3 months which they use for their illustration. Also, these investor educators cannot boast about their success rate, their success and sort of performance which they've delivered in the past. So of course SEBI's intention is pretty clear, to break the revenue model of unregistered financial influencers, asking regulated entities to not have any associations with them. If any of the violations comes through, then there will be penalty, debarment as well as cancellation of licenses.
Got it, Yash. Yes, there indeed is an important clarification, this FAQ that has come in today to further pinpoint what is and isn't allowed in terms of, giving any sort of stock market commentary or, advice or education online. Okay, thanks for that. Back to the markets now. They've been one sector that I want to sort of discuss with you is the consumer durable space, especially some of these, big air conditioning and room AC players. And we've got some very sharp reactions today. Voltas, I guess the market's not happy with this big decline in margins, over 200 basis points. But Blue Star's numbers looked okay. That stock's also sulking. And Whirlpool has bigger problems. Whirlpool, the global parent, wants to sell its, a huge chunk of its stake. If you could just give us quick takes on, these three companies.
So I think on the face of it, I think Blue Star definitely stands out, I think, in comparison to others. Of course, I think one will have to go into the details about what went completely wrong with on the margin front with Voltas. I think one will have to go into that part of the detail. But on the face of it, I think the air conditioning business part for Blue Star seems to have worked well. As I said, that I think let's review the details more and then probably I think further analysis of the companies.
Devin, I don't know if Whirlpool is under your coverage, but I mean, even if there's no direct call on the stock, in general, how would you view this development? Because now the global entity has said that they want to reduce their stake to 20%. They're at 51% now.
Challenge should be, I guess, I think in this market, because many of these companies haven't been able to, I think, gain the same kind of market share that they would otherwise hold in their parent company's domain. I think that India market remains extremely price competitive, and I think the distribution reach holds the key. Some of the newer players like Havells, among others, have created that kind of a reach within these deep markets. So maybe I think that competitive pressure, I think, which is coming in, is basically asking them to stay put on creating further presence in the market, like India.
Okay, all right. But by the way, Adani Ports, Devin, at the bottom of the screen, they've upped their guidance. Stock, though, from the level it was trading at before that flash came, is actually lower, if anything. Any thoughts here?
Yeah, Prashant, I think the blended mix of the cargoes is definitely working well for this company. And even though the performance is not fully consistent with what exactly one has seen in the previous quarter, I would like to believe that the targeted volume that they are talking about for handling is giving sufficient amount of confidence for the growth in the business. And fortunately, I think the entire subject, I think, is basically assuming higher amount of growth, largely because of the trade activity happening big time. And as a result of which, I think the movement of cargoes are definitely picking up. At the same time, the company has been systematically implementing some of the strategies, including the automation processes at the port, which gives the confidence about driving the higher margins going forward. So the blended mix of higher yield, along with, I think, the increase in the volume, both goes well for this kind of a business for sure. And I think this company is champion on that front, I believe.
All right, Devin, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18, and look forward to our next one. Pokarna numbers for the third quarter at the bottom of the screen, 50 crores compared to 45 year-on-year. That's about a 12% growth. We'll have Ajay Tyagi with us of UTI Asset Management Company on the other side. His thoughts on the market and what UTI AMC has been up to in markets over the last many weeks. Okay, welcome back. We've got the market up just about 10 points, and 2 hours back, it was a pretty healthy-looking screen, at least on the index. Not so much anymore. Although I have to say that broader market, there is still a fair bit happening on the upside. Here also, I mean, the advanced decline has narrowed down quite a bit. So about 1,500, just under 1,500 stocks are higher, and about 1,230 stocks are lower at this point in time. But lots of 5, 7, 10% movers with volumes in terms of trade coming through. Let's welcome in Ajay Tyagi, Head of Equity at UTI Asset Management Company, who's with us with some perspective on things. Ajay, good to have you back. It's been a while. Thanks for your time. And tell us, Ajay, what have you been doing? Did you typically, I don't think you guys take cash calls one way or the other, right? Remain fully invested, but what kind of activity have you seen? I mean, you know, your fund managers, your team, etc., at UTI AMC, with regards to sort of buying, deploying more money which is coming in, or just give us a sense.
Sure. Yeah, Prashant, good to be back. See, I mean, our view over the last 12 months or thereabout has been, cautious about the markets, and more particularly cautious about mid and small caps. You know, you can say that we are slightly early in terms of sounding cautious, but over the last few months, the markets drift downwards. We think this drift will continue for some more time, possibly a few more quarters, and looks like 2025 would be the year of consolidation for the markets. The primary reason for our call is basically the valuations. If you put the valuations in context of what they have been over the long range, even now, after this 10% fall from the top, or maybe 15% fall from the top, you still see these valuations to be scary. So, our view remains, that of caution. As far as our activity is concerned, in line with our overall thinking, we have been, circumspect about, some of these mid and small caps and some of these hot sectors which actually blew the lights off in 2024. And we would say without any real fundamental improvement in quality of earnings, I think that is already starting to reverse, but we may see, more of that coming quarters. Yeah.
Okay, Ajay, got that. Good to have you on the show this afternoon. It's been a tough patch for the market now, running into several months. So, any key changes to the portfolio that you've been making in terms of perhaps, easing out positions, taking some profit, and now that we're down so much, maybe fresh purchases in areas where earlier you found valuations to be too high?
See, as you're aware, I can't be very specific about our actions, but what I would certainly say at this stage is that things have gotten slightly better from where they were, but not to a level where we are comfortable. I think, the market got overdone on the way up. Now, every 5 or 10% correction obviously looks to be an attractive position relative to where we were in August and September. But if you look at valuations from a slightly broader term perspective, we still haven't got into comfortable zones. I would say the pockets of comfort remain the same. Private sector banks is something we've been comfortable of. That's one area which still looks very comforting. The earnings quality for some of these banks is actually improving. So that's one area of comfort. I would say auto OEMs is another part of the market where valuations didn't go overboard. And I think that's, again, one area where we are finding opportunities which are favorable in terms of risk return. For most other parts of the market, things have improved, but not come to a level where we want to use our dry powder yet. Yeah.
All right. Hi, good afternoon and good to see you, and sir. Wanted to ask you about some of these fancied sectors, the delivery companies like Swiggy, Zomato. People wanted them at higher prices. We were getting lazy, a lot of usage out there. But these stocks have come off dramatically from the top. You're interested?
Again, I'm afraid can't be very stock specific, but let me give you the broad thought process.
On the theme, sir. On the theme. Do you think that,
See, let me just take a step back. Anything which is high beta in nature, regardless of the underlying earnings and the underlying strength of earnings into, both the near future and the medium term, would obviously fall more whenever there's a slightest of correction in the market. I mean, if you go back and look at, for instance, since you're speaking about new age companies or tech platforms in India, if you go back and look at the behavior of some of the tech platforms in the US between 2000 to 2024, regardless of what they delivered over a 2-decade period, they were the ones which were pummeled the most whenever markets saw the slightest of correction. That's just the nature of this beast. High beta names, high P stocks at the slightest of correction in the market fall disproportionately. So one must acknowledge the fact that this is how the price of such kind of stocks would always behave. Now comes the other thing. How are the fundamentals tracking? I would say yes. The anxiety in these names and this sector per se is on account of competition heating up. Some of the competitors actually giving discounts, because of which the incumbent players are seeing their margins getting pushed out into the future. To our mind, that seems to be a phase which will go on for a few quarters. It can't go on endlessly. Remember, the challenger is also wanting to IPO at some stage, and obviously this IPO can't happen, if losses continue to widen. So there will be some sanity returning back in terms of margins. The opportunity seems to be very, very large, and nowhere in the world has a proof of concept been established for quick commerce companies, but here in India, proof of concept has already been established. So, despite this breakneck speed of growth, the leader barely burns any cash. So yeah, I mean, that's my comment on the fundamentals, and I already spoke about the fall in prices. Yeah.
So broadly, the view is you are saying maybe slightly sideways for at least a few more months, right? As far as the market is concerned, nothing exciting, not the fast and furious game once again, at least not for a while, that we all have become very used to. But as we come back, do you think it happens quite often that for example, EMS etc. have been leaders of the last, I mean, this big phase, absolutely at the frontier. Will those be once again at the frontier whenever the market starts to look better? Or you think, I mean, there'll be a factor change? What's your sense?
Prashant, that's an excellent question. I would say there is always a bit of rotation whenever the markets rise back, from a correction and after having a bloody nose, so to speak. But there are some themes which go beyond just an interim correction. If the Indian government is really serious about making India a manufacturing hub, if they come back with a PLI scheme on components, which is what we keep hearing about, if they are serious about giving subsidies for making fabrication units here in India, I would say that some of these EMS companies would have a very, very long growth runway. Do remember, the Indian government has also been talking about export opportunities beyond just the domestic demand. So I would say a lot depends on the government policies. As of now, we do hear that while the PLI assembly is going to end in 2026, but before that, we're going to see a PLI for components so that we can capture a larger share of bill of materials. And if that be the case, that's going to be good news and would add a further growth driver for EMS companies. Yeah.
Okay, so that could be a space to look at as well. Ajay, it's been a pleasure having you on the show today. Thank you so much for joining in and sharing some of those insights with us. That's a view coming in from UTI AMC. Back to the market, it's very, very quiet out there, not much moving, 20 points lower. On the Nifty, the mid-cap index is also completely flattened out. On the Nifty, BEL is actually doing rather well in this otherwise dull afternoon. 4% higher. BEL is the top winner on the index at this point in time. Let's move on. We actually have some snippets coming in from New Delhi on India's AI dreams. Union Minister Ashwini Vaishnav today announced that India will have its own AI model in the next 8 to 10 months, adding that the world is looking at India as a major contributor in artificial intelligence. He also says that the country has over 10,000 GPUs that will power the AI ecosystem. Take a look.
In the India AI mission, we had taken the common compute as the most important part of the mission, and very happy to say that against 10,000 GPU, which was our target, we have actually empaneled 18,693 GPUs. Overall, net high-end GPUs अपने पास 15,000 आ गए हैं. The second big mission, as you know, was to develop our own model. And over last almost 1.5 years, our teams have been working very closely with the startup ecosystem, with the researchers, with many professors, और उन सब के साथ बातचीत करके we have created the framework which will be launched today. We are calling for proposals to develop our own foundational model, and we believe that there are at least 6 major developers who will be able to create foundational models in the next 8 to 10 months on the outer limit. So today, most of the major chip designers of the world are willing to work with India for developing a GPU on an architecture which can be very innovative, which can be more efficient compared to the existing ones. So that possibility is available to us today, and we are working on it, and hopefully I'll be able to share with you more details in coming weeks. The world definitely recognizes India as a major talent pool, and I'm sure you would have seen those parliament questionnaires, the answers that we had given in the parliament questions. Stanford University, they have evaluated many countries, and India ranks among the top on the AI skills and the AI talent which is available anywhere in the world.
Welcome back. Markets back up closer on 60 points as we speak. So that's good news. Expiry related factor as well playing its role, I think so. So last 25 minutes, but plenty of action in store. To help us out with what's going on D Street Chatter, Nimesh joins us to tell us exactly that. Nimesh, what's the buzz?
Hi, Nigel. A good day of consolidation after the recent pullback. Market Nifty has been pretty much range bound. We have this volatility because of the expiry as well. But from a technical point of view, watch out for 23,300. That's a big resistance level to watch out for. And of course, we are heading into the big event that is budget on Saturday. So maybe tomorrow may not be a very large day in terms of volumes because everybody would like to be on the sidelines. But again, that's one big trigger to watch is the budget announcement. So that's going to have an impact for sure. From a sector point of view, a couple of sectors which is seeing some bit of buying interest. One is the entire rate-sensitive basket, so NBFCs, banks, and especially the real estate names is where there is a lot of bidding interest from larger institutions. So that clearly is a sector which stands out from a flow perspective. The other sector which has seen a bit of hope trade is the PSU names today. A lot of PSU stocks are buzzing out of the budget announcement. So that's something to watch out for if there is something meaningful in the budget as far as capex is concerned. But broadly, I guess the cash volumes are on the lower side, but because of the expiry, you might see this volatility in the last 30 minutes of trade.
All right, so that's essentially the broader sense. But what about stocks, Nimesh? What's on your list?
So the first name, Prashant, is PFC. I spoke about a bit of buying interest back in the PSU names. This is one stock which stands out in terms of very aggressive buying from larger FIs. So they expect high delivery volumes and looks like some bit of interest is back in the PSU names like PFC. The second stock is Crompton Consumers. That stock has been under pressure in the last couple of days. I understand a leading global fund is an aggressive seller of late. And that's the reason why you're seeing selling continue in that particular name even in today's market. The third is Dreamfolk Services. Again, while the stock has been consolidating of late, I understand specifically for today there is a MOC sell flow at a leading FID. So maybe in the last 20 minutes you might see some reaction in Dreamfolk as well. And the last is a couple of large liquid names, TCS and Axis Bank. I spoke about buying in PSUs and other stocks. The large cap banks and IT names are seeing a bit of selling pressure. So both these stocks have seen sell flows, and there is clearly selling in stocks like TCS and Axis Bank in today's market.
Nimish, any feedback on Whirlpool? I mean, if you've spoken with fund managers or generally from the market, I mean, down 20.
Well, actually, it came as a bit of a surprise, right? I mean, last time when there was a large block, it was very aggressively lashed up by domestic funds. This time, now that they're already at 51, they're talking to come back to 25, 26%. So it's a bit of a shocker that they're looking at such a large dilution and a block sale. So it came as a bit of a surprise for sure, Prashant. I don't think Street was anticipating such a move from the parent after just 1 year of selling a large chunk.
No, absolutely. Not even saying they'll do like 5% and stagger it out straight away. When they're saying, I think in a year or two, they want to sell the whole thing down to some 20-odd%. Got that point.
I think the problem is the kind of debt they have in their book, right? More than $7 billion or
the global parent.
Yeah, absolutely. Yeah. So they're trying
cash
to.
Out.
Yeah, I mean, I wonder what those are feeling who took it in the first block.
Plus, I don't know how if they sell such a large quantum in a market like this, and with the earlier guys not having made enough money on it, I don't know. I mean, how they'll manage to get the placement.
We know who's not interested though, Blue Star.
yeah. Nigel tried planting that idea in the Blue Star management's head, saying, "Why would you look at Whirlpool?" They said,
if you looked at it yesterday, today is getting it 20% low.
By the way, guys, the market has come back sharply. Actually, look at the Nifty now, 90 points. It was absolutely flat, and I think in the last 5 minutes or so, you see that surge which is starting to appear out there. So yeah, 23,250 odd is where we're trading. The Dabur numbers, by the way, are also on the screens. It's, almost exactly what was expected. 515 was the profit expectations. 516 is the actual number. You'll hear, by the way, from the management in just a bit, in the next 5 or 10 minutes or so, here on the channel. Dabur is also seeing a bit of a spike as we speak, but I think it's the market more than anything else, which is looking complete sort of turn as we approach the last 15 minutes or so of trade. Mitesh is with us with what he'd want you to do. Mitesh, what do you have?
Yeah. So BTST on SRF, I think, is closing with a very strong level. In fact, it can be trading buy as well, but for the timing of BTST with a stop at 28.20 for targets of 28.80. And the other one which I like is Hero Motors. Disclaimer, I have positions. Disclaimer, it's also a recommendation to my clients. There's clearly vested interest, but at the day's high and reversing from extremely oversold levels. So BTST is what I would recommend for Hero Motors. Keep a stop at about levels of 41.65 and a target of 42.20.
Okay, all right. Got that, Mitesh. Thanks very much. By the way, that's an inline performance from Dabur. Profits in line. The volume growth is just 1.2%, but then that's what the poll was suggesting anyway. And on margins, we'll get the margin number as well. Margins are not expected to inch up, and that's what the company had already guided in its update. So let's see. We'll put that up. 3353 is the top line number that's come through, which is mildly higher, very, just a shade higher than expectations, if you want to call it that. But otherwise, looks like an inline set of numbers. Could be a issue of no further negatives and the stock already having been beaten down, which is why we're seeing a bit of a positive reaction. Plus, of course, the fact that overall mid caps are pulling back. Let's move on now. We'll get more from the Dabur management in a bit. But moving on to L&T, set to report numbers today. Vivek is here. Vivek, what can we expect?
Well, L&T expect domestic execution to be muted, international execution to be much better. Top line on the back of that seen higher by close to 15.5%. Revenues are in excess of 63,750 crore. EBITDA is seen in excess of 6,600 crore. And margins, the consolidated margin is the one that we are talking about, is seen almost flat on a year-on-year basis at 10.4%. Profitability is seen higher by 27.6%. What is it that we need to watch out for? Number one, does the company go ahead and maintain all of its margin guidance, top-line guidance, as well as the profitability guidance that are given as far as the FY25 is concerned? Key to watch out would be order inflows and the order prospect pipeline. Along with that, Q4, Q3, we believe that the time has now elapsed, but does the company announce any buyback or any such move or a special dividend in order to grow ahead and prop up its ROE? What is it that Kotak is expecting? Kotak is expecting weakness in domestic execution to be compensated by strength in the overseas execution. Along with that, they expect the core engineering as well as construction division EBITDA margin to come in at 7.9%, up 20 basis points. Remember, as far as L&T is concerned, core A&C margin has been the weak point or the sore point that analysts on the street have been waiting to go ahead and inch up. What does BofA Securities expect? They expect L&T to meet or slightly beat its FY25 guidance on all fronts, order inflow, revenue as well as ROE. Remember, order inflow guidance that the company had given on a very strong base for FY25 was 10%, top line guidance seen at 15%. Important set of results come back, it'll come post-market hours today.
Okay, all right, got it. Vivek, thanks very much. We actually do have the Dabur management with us now to talk about the third quarter performance and, more importantly, the outlook going forward. Mr. Mohit Malhotra, CEO of the company, with us. Mr. Malhotra, great to have you on. Thanks for joining in. Now, you had already sort of kind of prepared the street to temper its expectations, right, with that update that came through. So let's talk about what happens from here. The volume growth is just about 1.2%. Take us through the contours. What do you see ahead? Is there any light at the end of the tunnel in terms of better demand, consumer demand, and how is the fourth quarter shaping up?
Yeah, hi Surabhi, thank you for having me. So I think overall, in terms of the market, we think we've already bottomed out here. So from here, there should be recovery. As you know, rural is already showing a upswing, and I think urban is also bottomed out. We have a lot of expectations from the budget also. Hopefully, I think there will be some sort of softs which will be given to improve the urban demand. And I think because of bottom out, things would only look better from here. Our volume growth has been in the range of around 1.5% odd volume growth, in which our 50% of the portfolio, home and personal care, has had a volume growth of 6%, which is the bellwether of how the economy is doing, which includes hair care, oral care, home care, skin care, etc. Our food business got impacted because it was winter, and the food business got impacted. The core Badshah business has actually grown by 15% in terms of volume, and healthcare also got impacted because of the season being delayed winters and contracted winters for us. So overall, I think it's been a good quarter for us, but for beverages business, and because of season, we got impacted in Chyawanprash specific case. But rest going forward, I think we are targeting a mid-single digit kind of a growth backed by volume only, and low to mid-single digit kind of a volume growth going forward in the next quarter. And for the full year, if the market supports us, then we look at high single digit, partially volume and partially price growth next year.
Mohit, hi, afternoon. So FY26, you're saying, could be 8 to 10% possible?
Yeah, so we are in the process, Prashant, of making our budgets yet, but that's what we should aspire to go, and mid to high single digit kind of a growth rate next year.
And we always talk about the impact of quick commerce on retail companies, but on a company like yours, Mohit, I mean, has there been a discernible impact one way or the other?
Yeah, I think quick commerce is a basic tailwind for us. We've grown quick commerce as a business by 75%. You can imagine, while the GT is suffering, which is general trade is suffering, quick commerce is blowing out of proportion, 75% growth, and it's already contributing to around 50% of our total e-commerce business, which is also grown by around 30% for us. So I think there is a definite, this is an emerging channel which we are wanting to double down on in terms of innovation, in terms of engaging and doing joint business planning with them. So that's a definite vector of growth going forward.
How big is the e-commerce part of the business for you?
So total e-commerce contribution is around 8 to 10%, depends upon quarter to quarter. If it's a big billion quarter, it goes up to 10%. Otherwise, it's around 9%, Nigel, broadly.
And you see this number, I mean, going by the kind of growth rate that you're talking about, it'll only go, increase from here on, right?
Absolutely, absolutely. Yeah.
So where do you see it headed then?
So I think year on year, it will only go up because the number of cities that quick commerce people are going is increasing. So there's both organic growth and also inorganic growth. Inorganic growth by way of adding number of towns and cities, and organic growth by adding assortments and increasing the total ticket size. Average order value for quick commerce has moved up from 300 rupees to around 500 rupees. From 500, it will only move on to around 700. So this will go on. So I think 10% broadly is what should be next year going forward, e-commerce contribution to overall business. And within that, quick commerce will be in the range of around 50% or so.
Okay. And they'll stay at 50, quick commerce will stay at 50% of the total e-com sales. And,
Yes, so I imagine for the full year. Because this used to be 30 has become 50, and I think 50 will get sustained over next year, if not grow from there as well.
I guess, Mohit, I mean, all e-commerce, I mean, that's one way, viewpoint that all e-com will become quick com. I mean, faster and faster delivery, right?
Yes, absolutely. Correct. But the product portfolio, I think the total spread of the portfolio will only increase from there. Earlier, quick commerce guys were only stocking grocery. Now from grocery, they've expanded their entire portfolio, and also so many of them are also stocking durables. So I think as the assortment grows, the order value will grow, and the break-even will become even more faster for them.
The FY26 sort of mid to high single-digit volume, I mean, total growth, volume plus price is dependent on some stimulus from the government. You briefly did mention budget.
Yeah, because I think we expect the government to give some sort of support to the consumer spending, because urban India is actually struggling with the real wage growth actually in the negative radar, and the rural real wage growth is actually +5. Urban real growth is in the range of around -7 or -8. So definitely expect the government to do something, but I don't know what will actually happen. But our expectation is definitely there. Yeah.
No, so are your expectations contingent on something coming?
No, not really. No, okay. I think we expect the some stops to be given by the government to improve the consumer sentiment from here and increase consumption.
All right, fair enough. Mohit, we'll leave it there. Thank you very much for joining us. You started by saying maybe we've hit a bit of a bottom and things should improve with or without a little bit of help from the government with respect to the budget or otherwise. So 1.5% volume growth, mid-single-digit volume growth ahead, and then maybe mid to high single digits in FY26. That's the word coming in from Dabur at this point. Well, the government's received feedback about the need to put more consumption power in the hands of middle class, support MSMEs and manufacturing. Some quarters of the government believe there is an urgent need to support the middle class to increase consumption and growth through tax relief. So will this translate into income tax relief for the middle class and ease of taxation for the Indian industry as well? Parishad is here. He's picking up important information right before the budget. Parishad, over to you.
Well, simplification of the tax system, ease of paying tax, and putting more money in the hands of middle class are going to be big themes in the union budget. Sources tell us that in interministerial consultations, some quarters of the government have expressed the need to provide relief to the middle class. And the expectation here is, and the feedback here is, that there should be relief in income tax, also hiking exemption limits, at least for people who are earning up to 15 lakh rupees. Now, how does this take shape in the new tax regime? That is something that remains to be seen. Earlier, we have reported that the government is likely to announce more tweaks in order to encourage people to join the new tax regime. Having said that, many people in the government have been saying that we need to put more consumption power, more money in the hands of middle class to consume more and also put growth back on track. So driving consumption, the growth agenda for the long term will be major focus areas. When it comes to manufacturing, there have been PLI schemes which have been announced by the government over the years, but this time measures are being considered to support labor-intensive manufacturing in sectors like textiles, furniture, food processing, where India can have the China +1 advantage. So we could possibly see some measures, some ease of doing business measures, or maybe fiscal measures to support these industries as well. Decriminalization of laws. There has been a lot of feedback from the industry that many of the tax laws, many of the other legislations in the country need to be decriminalized, and a very strong message on that needs to go out from the government. So we are likely to see that in the union budget, simplifying the way in which taxes are paid both by the common man and the industry. That is something we could see. Also, measures to support ease of living for the middle class. That is something we might see in the union budget. And finally, a significant support package for MSMEs. This has been the ask. And there is a feeling that MSMEs need hand-holding and financial support. So let's see what the finance minister does on that front.
All right, Barisha, thank you very much for that. That's important information right before the budget, day after tomorrow, coming in from Delhi. So we'll have to just wait and watch. This is all source-based information to CNBC TV18. We take a quick commercial break here. More on markets on the other side when we return.
Welcome back. Markets moved to the high point of the day. ITC is moved higher and HDFC Bank as well. Both those two big boys rocketing as we speak. And, we're going to end lower for the series itself. But a good fight back is what we are seeing from the day's low. Amrish Palekar joins us to help us out with, his take on various stocks. Amrish, first you go for it. Tell us that one stock that you're giving us for today in terms of which is fundamentally placed and you believe that our viewers should take a look at it.
Good afternoon, Nigel. My pick is Vedanta. Our company has operations across various verticals. Aluminum, they are the largest aluminum producer in India, around 45% of domestic market share. Leaders in zinc, lead, silver. Oil and gas, they are the largest private sector oil producers. When you talk of iron and steel, one of the largest Indian private sector exporters of iron ore. In power, they should soon become the second largest private player. And in copper, it's got one of the largest smelters in India. They, in fact, clocked a record production of alumina, and zinc in the last 9 months. And currently, plans of setting up a 1 lakh crore aluminum refinery in Orissa. One of the major issues for this company was the debt burden and its maturities. That's more or less got postponed to FY27 and beyond. Already they have reduced debt by about $4.5 billion. And also now they've got credit upgrades from 3 global credit rating agencies. So that's another positive. Dividend yield works out to about 4 to 5%. But the major trigger going ahead is the proposed demerger, which will create those independent global scale companies. Normally, whenever there's a demerger from a global scale, one or two of the companies which are demerged become much smaller. But here, all of them are going to be of global scale. And that should happen by June 2025, possibly a month or two later. And this, I believe, should be wealth accretive for the shareholders. So valuation-wise, on a consolidated basis, I'm expecting an EPS of 59 for FY26. So the target price on a pre-demerger equity is 590, whereas post-demerger, I think the sum of parts could be much higher.
Okay, interesting. Well, quite bullish on Vedanta. That's the stock that Amrish is looking at. Amrish, we have a few more queries to you. But for the time being, let's take a look at some of these stocks. Waaree Energies, the top line is more or less flattish, but the net profit has moved up. Remember, now they're getting into backward integration. Capacity as well has moved up. And the stock has seen a sharp correction from the peak. So for the time being, the stock has now moved to the high point of the day. I'm waiting for the operational performance, because on the top line, there doesn't appear to be any kind of growth. In fact, there's a mild degrowth. We need to wait for what is the EBITDA number out there. So that's one stock that we'll keep on your radar. The other couple of names, well, you have numbers coming from JSPL post-market hours. That stock has suddenly moved to the low point of the day, so that should be the one that you should keep on your radar. Dabur bursting away, stock up close to around 4%. As the management just told us, they believe the worst is behind and they're hoping for things to pick up from here on. Towards the end of trade, you had stocks like IRFC as well that did spike up in trade. So it's a good close to a weak series for the bulls. The Nifty goes home with a cut of close to around 2%, but a fight back is what we saw on the final day of the series.
Okay, I think just about, there you go. That's the closing bell. 130 higher on the Nifty finally. 23,300 is where we're at. So, about 50 points under the 20-day moving average for the Nifty. I think the Nifty bank sort of closes above the 20-day. Yeah, I think we do. So 49,400 almost. So we did actually pick up a little bit. At 230, we're about 0.18% gains. We're about 0.5% higher in the Nifty bank at 330. So, some up move is what we have seen. These are quarter-on-quarter numbers on Waaree, but I don't know why we should look at quarter-on-quarter. If we do have year-on-year, we should actually put those up as well. But for now, we have the Q1Q figures for Waaree that's coming through, recent listing there. We'll take a quick commercial break here, and we're going to come back with Markets Forward, which will put up everything you need to know as far as tomorrow's session goes. Coming right back.